So there are several parameters to judge a portfolio, and one of the most important one is knowing your fund manager and his style of investing and how he is reading the current market layout. So with an aim to bring you closer to your fund manager, today on board we have Axis Bluechip Fund's Shreyash Devalkar. Shreyash, good evening and welcome to the show. We'll be talking about your flagship scheme, Axis Bluechip Fund. So there is a school of thought that the large cap category is the one where passive funds will outperform their active counterparts. You think it's getting increasingly difficult for active large cap fund managers to outperform. What is your take on this?
First of all, thanks for inviting. This debate around active versus passive has been there for long globally and more so now in India in the large cap category. And probably the backdrop you're rightly highlighting is the outperformance is difficult in the current scenario that has been observed in the recent performances. There are a couple of ways to look at it. One is in probably a certain cycle, certain set of fund or certain set of philosophy works, and in certain business cycle it may or may not work. So in that sense, what at Axis we try to do is be consistent on your philosophy, which is quality and growth. There are cycles which may happen, and during which in some cycles the funds will do well. While in some other cycles they may not be able to keep a pace with the strategy as such. So if you look at index or benchmark itself is a strategy in a sense. So there again it would also go in its own cycle because of the underlying holding. So what I would look at it from a point of view that as an investor, when I'm looking at it, whatever I am doing, whether I'm doing it consistently. So if I am investing in a particular strategy, so whether I'm following that strategy consistently and I am just sticking to one strategy or not. So whatever decision one makes, whether it is an active fund, whether it is a passive, inactive, it may be various styles which are there. Whatever is the strategy one chooses, following it consistently would be more important than trying to look at what is working now versus others.
Sure. Let's get into the nitty-gritties of your fund, Shreyas. Now, top holdings are in the financial technology and services sector. The returns recorded by this fund over a 3-year, 5-year and 7-year time periods are 15.8, 12.8 and 13.5 respectively. Now, looking at the top holdings, explain us what's the reason for holding on to these sectors? What's the kind of outlook that you have for these specific top holding sectors?
Look at fund as a whole, then fund as a whole has always been with the philosophy of quality and growth. When we say quality and growth, normally you would observe that the growth which is structural, the structural growth has been in B2C space. And now if you look at the fund, and then the fund is also broadly positioned in that. So when we look at now the segments which you tried to highlight, one is the financial services. Financial services in India has been about retail credit growth, and retail credit growth has been around mid-teens pre-COVID on a CAGR basis, 5-year, 10-year. While during COVID, it faced trouble because of obvious reasons. However, now on a lower base or with certain problems getting sorted out, we are seeing growth coming back out there. So the reason can be a low base as well as the bottlenecks which were there for retail credit growth are actually reducing. So because of this historical reason, wherein the retail credit growth has shown a strong growth over cycles and over time period. Generally, financial services which are oriented towards it. So that is one of the idea on the B2C side, because it captures most of consumption stories, right from housing to consumer durable to autos to everything, yeah, even personal consumption using the personal finance or personal loans. So this is about the financial services as such. The other one is around the consumer services or consumer as a whole. There we have observed that again, give and take, some segments have done better, some segments have not done better in consumption, while the retail, that is the retail industry, that has done well again over longer period of time. And that's where the retail industry comprise good portion of the consumption basket. And obviously, the third element I think you highlighted was in services, the IT services. IT services, we are there, while you would notice that its weightage is around the benchmark level. So we would be around equal weight in that sense.
Shreyas, now let's talk about the demand outlook, because what's happening is right now we are seeing a robust demand. But then do you think the demand outlook will start weakening given the fact that the central bank plans to be in the accommodative withdrawal stance? Or according to you, looking at the kind of rate hike scenario that could deepen, what is your take on this?
So globally, central banks are definitely focusing on inflation. In India as well, we have seen the stance to focus on inflation. But more important, few aspects to the consumption stories and overall economic growth. So consumption is not isolated story, right? It is linked to many other segments of economy doing well. So exports do well, the consumption does well. When the IT services does well, the employees of the sector and the consumption around that does well. So everything is interlinked in that sense. When there is a withdrawal of liquidity or controlling inflation, which is leading to higher interest rate, when we are observing that, especially now coming back to India. So globally, you are right, there are more challenges around it because their absolute interest rates are much higher than what they have seen earlier. While in India, these levels of interest rate, the housing loan around 8% plus is not like unheard of. It's not, we have gone through this, and our economy have been around this just a few years ago. So the point is, in case there is a difference between what is happening in the world versus what is happening in India, so there, the interest rates right from 0 to 2%, it is just jumping or doubling from those levels, while in India, it is not the case. So the net impact of interest rate, more than that, what happens is overall economy, how it does, that would be much more important. And in that, when it comes to equity as an investment, we need to look at a couple of points in this, that in this cycle of economic progress, there are a couple of things which are peculiar about it. One is this time around during this crisis situation, when it comes to world as well as in India, and especially around the inflation. Last time, many companies were more leveraged, while this time around, if you take listed space especially, the leverage is less in the corporate sector. On the other hand, even on the retail sector as well, we have gone through shocks like COVID. Before that, there were multiple shocks as well. But during that time, if you observe the behavior, the asset quality of retail credit has been, and even the corporate credit has been good, and that also lends additional comfort. So these are the two more important parameters when it comes to listed space. One need to keep in mind, while as well as the retail as a consumption, as a pack or consumption as a economy is concerned. One need to keep this factor in mind, which is not exactly similar to what it was during last crisis.
Shreyas, now the reason also we have fund managers on this particular segment is because we want to understand how do fund managers really handle volatility. So now tell me or help us understand how are you trying to balance out the market volatility amidst all the chaos and with it getting challenging to actually beat the benchmark?
Sure. So one need to look at two things out of which first, which is more important, is which the companies which you are owning or companies which you want to invest into. How is because anyway that has been the rule book during any crisis situation or any situation where there is uncertainty. Let's not call it as a crisis, but it is more of an uncertainty, volatility. During such times, the rule book always has been, which applies even in the current situation, is to be with companies which are having good free cash flow, which are having less leverage, which are having growth plans which can be funded out of their own internal earnings. And for that, what matters is what is the return on equity, ROE of those companies. So these are the basics. One need to stick to the basics of investment, and that always helps us during the various cycles, and especially during the volatility.
Absolutely. Shreyas, now help us understand what kind of a positioning should you be having for a large cap fund in your portfolio? Because what happens is they are to be placed as a defensive allocation in your portfolio, right? But then keeping in mind the kind of underperformance, what's the kind of exposure should one go ahead? Is it the time to cut off your exposure or to come out of the funds which are not really giving you profit, which are not earning you or not lined up as per your future goals? Large cap active funds I'm talking about here.
One need to look at when we look at large cap versus mid versus small. One way to look at it is obviously the large cap, less risk, relatively less return versus mid cap and small cap. That is one way to look at it. But if you look at the construct of large versus mid versus small, if you pick up any benchmark indices and obviously because of that any portfolio of large versus mid versus small, what you will observe is large cap categories are or large cap indices are more oriented towards B2C, while mid cap and small cap are more oriented towards B2B. Just to pick up an example, the auto OEM would be a large cap while auto ancillary would be mid or small. And likewise, that applies everywhere, that a chemical industry would be a mid or small, and the FMCG or pharma where the end usage is maybe large. So the point is these categories are complementary to each other. So that is one of the important point one need to understand and keep in mind while allocating their funds. So it is not that one way to look at, definitely one way to look at should be that risk reward framework, high risk and high reward, and low risk, low reward, and that's where the large cap is relatively low risk. But the more important, also one more important observation is you are buying different set of companies which are having exposure to different aspects of economy. One is on the consumption side, the other may be on the B2B side, which may be there are multiple segments, sub-segments in it, right from auto ancillaries to chemical to manufacturing, industrials, etc. So keeping that in mind, I would always would like to have a portfolio which is combination of both, because it is complementary to each other rather than competing they're not competing products to each other.
Last question to you, Shreyas. Now, FPIs have again turned sellers after a burst of buying. How do you see the FPI's behavior over the next several months? Is India still an attractive destination for them if we talk about emerging markets?
So you must have observed that there are multiple data points which suggest that yes, the FDI, if you're talking more of FII as well as FDI, or
Yeah, FIIs.
Right. So if you look at FII as a category and then the flows, yes, there has been some outflows over last 1.5 year, but then again, if you notice, it's Indian market's performance, despite that, which is helped by domestic flows, but more importantly, it is helped by our economy, which has behaved in a much better manner compared to the other economies or more other competing economies when it comes to the foreign flows. So in that context, considering our growth, considering our demographics, considering our leverage to actually energy prices being low. So the energy prices being high was definitely a higher risk for us. But now we have seen that even the crude prices are low. So for us, as long as our inflation is under control, which is, and especially the inflation which is more imported inflation, I think eventually the FIIs would like to look at India as an investment destination.
All right, so that will be all for today, Shreyas. Thank you so much for joining in and explaining your strategy for Axis Bluechip Fund and what should be an overall strategy when it comes to active large cap funds.